All right, you guys, this is going to be a critically important video, so watch it all the way to the end. Some of you guys want to trade prop firm accounts, and I'm going to show you how I manage multiple prop firm accounts, meaning controlling my urge to over leverage and blow them so that you get that nasty email saying, hey, you did a great job of trying, but you failed, and here's a 10% discount on the next retry. Use code word retake or something like that, okay? So here's, and I'm going to go through four of them. I'm going to go through four of them because on this terminal here, I'm managing 4 prop firm accounts, okay? So as you can see, this one, it started off with a $300,000 balance. I've currently got it up to $311,000. You can see some of the trades that are running right now. Today is 12/8/2023, which means NFP news just came out. And so, things are looking good on some of these trades here. But as you can see here, one of the things that I do, and let's go to the lot sizes. Okay, this is lot sizes. If I'm just tittling around with the position, okay, let me do it like this. If I'm going to enter a trade right now, notice what my current balance is. This is the closed balance, which means I closed out 8,000 of it, and then I still got 2,300 still running on this account. Notice I'm going slow. Okay, slow. Yes, you have 300,000, which is what they show you. But if you go to the number of your daily drawdown, that's actually your real number. I'll repeat that again. Never be impressed with how big of an account you purchase, because all it takes is for you to be in drawdown, not even loss of trade, just in drawdown. If you're in drawdown and it's beyond the daily balance of 4% or 5% or 6% daily drawdown that they allow you to have, you automatically have just blown that account, which is why so many of you guys are blowing your account. You're looking at it as, oh, I got a $300,000 account. No, you don't. Basically, with this one, a $300,000 account will get you a $12,000 daily drawdown limit. And you say, oh man, that's plenty. Not when you're being greedy. Not when you're trying to trade 10, 20, and 30 lots. So all it takes is for one trade to go the wrong way and to go into drawdown, such as what could have happened today during NFP news. It just simply goes into drawdown, and then you're taken out and you've just lost that challenge, and whatever they charge you for that challenge, you just lost that money. Why? Because your whole focus was on the $300,000, the $100,000 account. You're looking at the big number. That's not the number you ever need to focus on. Always focus on what is the daily drawdown limit. That is why your account keep getting kicked. Okay? That's why you keep getting that email saying you over leveraged on the daily drawdown limit. That is the number you're going to target. Okay? So whenever you're buying challenges, just look at the daily drawdown limit, and that's basically what you're purchasing. Okay? All right. So with that being said, to protect myself from getting greedy, okay? Notice that with these positions here, when I was at 300,000 and 307,000, I had used 3.7. Okay? When I was at 300,000 and 304,000, I used 3.4. Do you see what I'm saying? You see how I'm doing this? Okay? So anytime I'm entering into a position, okay, and I'm going to look at this balance and I say, okay, how much am I going to put in? Like for an example, I can enter more on this one. Okay? This is one of my favorites to ride. And it's going into the weekend, so I decided not to put much on it. Let's go to the 30-minute. That's looking good for the ocean wave. Okay, so the ocean wave is not looking bad for this trade. Okay, so if I was to actually, and this is only $16, so I'm going to close this out at $16. Okay, it's no big deal one way or the other. But if I was to take this trade to the upside, I'm going to right click. Okay. And by the way, this is the MT5. I told you we are working on the MT5 version of the Ocean Wave. It still has some glitches that we're working on, so I haven't released this one, but this is the MT5 trading platform. So we are, as I promised, working on it. Okay. So I'm going to enter this trade here. And notice my balance is 310,000. I don't care about the little numbers, just 310. So instead of 3 lots, I'm going to use 310. Okay. See that? 310. See, just the first 3 numbers. That's going to be what I represent as my lot size. Almost clicked on the wrong button. Now I'm in. Put my stop loss below the second wave, and I'm done. So now when you look at this trade, see, 310. Okay. You see what I'm saying? Okay. So the 300 represent how many lot sizes? Well, oh, actually, I could have did 31. Oh, but anyway, y'all get the point. The point was, when this was at 307, the 7,000, I put 70 cents. Okay. You just dropped the zeros. When it was at 304,000, I used 3.4. Okay. Are you understanding? So I actually did this one wrong, but I hope you guys get the point. All right, let's go to another account that I'm managing. That's one of the 300s. That's 310. Managing many accounts. All right, so let me go to this one. Let's see what the balance is. All right, so this one is at 291. Okay, with a running balance of 1,100 in profit. Forgot where this one was, but so again, if I was going to start. If I was going to start this one, let's take a look at GU. Oh, GU already dropped. Yep. All right. So let's take a look at this. So let's just say I wanted to hop in this one. I'll close this out. This probably ain't much here, just 46 bucks. So I'll start fresh. So what would I do with this one? See, 200,000, 291,000. So what would I put this at? I'll enter this trade, and I'm going to put 2.90, okay, or 2.91. I can do that. So you see how these first three numbers are automatically telling me my lot size. I don't even have to think about it. I don't have to worry about it. I'm not going to get greedy because I just taken my time. You see that? The first three numbers, it's what the lot size is going to be, okay? And this will keep you quickly on your toes of making sure that, hey, you know what? If I am trading, see this one? All right, let's do another one. I'm gonna close this one out. It's just 63 bucks, not much. It just keeps me on my toes to let me know, okay, hey, what if? See, this one is what, 292? So I can switch this to 292. Okay. And go for the buy. I'm in the trade. Below the second wave. I'm done with that one. And I'm going to enter the last account. I have 4. Okay. And so this one, I have 100 on this one. So this is about $1 million worth of trading accounts or close to it, something like that. Anyway, so it's only 30 bucks. So I'm going to close this out. And I'm going to place a trade on this one. Okay. And what am I going to do? Look at the first three numbers, 102. Or you can even put 120 if you want. You know, 2,000 represents 20 cents, 10% on that. All right, so I can do it like that too. Okay, but either way it goes, you see how quickly I'm making my choices on how much I'm supposed to leverage based on what I have in here. Okay, based on what I have right here, these first three numbers. So therefore, when you're trading, and this one I'm gonna have a running balance of 900. So you know that's not bad. That's 1% or whatever percent. I'm not good at percentages, but you guys get the point. The point is that whatever this balance is right here, this number, I'm only going to use that number. Okay. And the reason why, it keeps me under control. Keeps me under control so that I'm not getting emotional over the trades. I know exactly how much I'm supposed to use on this trade, and I'm never over leveraging. So if a trade goes the wrong way, or as I told you guys in class, what happened, the broker had sat there and their whole platform, all of these accounts with this particular prop firm, the liquidity provider or the broker who actually provides the liquidity, their whole thing froze up in the middle of some trades, and it was terrible. Now, the wonderful thing is they were able to credit back the losses that happened during their freeze. They credit back the balance, which is fine, which is fair. I appreciate that. They showed me that this prop firm has credibility. Because things happen, you know, it's not a big deal. Things happen, but that's the point. Things happen. So you don't know what's going to happen. And so therefore you don't want to over leverage on one position because you're trying to get excited and you're in a rush to try to get to the finish line of these prop firm challenges. Okay. Don't be in a rush. Just take your time. Systematic. Take your time. Rhythmic, robotic, very, very rhythmic. Okay. And people were looking at this and, hey, Uncle P, I don't know if that was a legitimate trade that I would have took. Okay. You're missing the point. Okay. You're missing the point. You're more about looking at trading than you are looking at exactly what I'm trying to teach. As you can see, price action is above the neutral zone here. So it's just a simple trade. And again, this pair moves so slow. and it's so inexpensive until who cares? Okay, this was for demonstration purposes only. All right. Plus it's Friday, so no, I'm not going to look into other trades because I want to see what the market does over the weekend. And then around 9 p.m. Eastern Standard Time on Sunday night, I'll start getting into more trades. And this is just for demonstration because I know some people out there, hey, you ain't did this or you did that. They're always looking at something they ain't got no business thinking about, getting distracted. Okay, so focus. The whole point of this video is to show you how I manage these accounts to ensure myself that I'm not getting over enthralled into a position and getting that nasty email that says, hey, you was trying. That was a good try, bro. But thank you for your money, because guess what? You're over your daily drawdown. Many of you guys who've been doing prop firm challenges, check your email and you'll see probably that's why you didn't pass. It wasn't that you weren't good enough. It's just that you keep over leveraging. So this is a quick technique that I'm utilizing for me to help me keep myself contained and not get excited that, oh my God, look at how much money I'm trading on all these accounts. Because think about it. If you have that large of a number of accounts that you're managing, okay, and you were working on Wall Street for them, would they allow you to just choose any lot size that you felt like choosing? No, of course not. They're going to still keep you contained within the 1%, trading 1% of their portfolio, probably 1 to 2% of their portfolio. Why? Because they want to preserve the 98% in case something bad happens. So you can start doing this yourself, because technically you do work for Wall Street or for this prop firm. So they are technically your boss because you're using their capital. So you want to show them that you can manage the account wisely, because they all know that trades are going to work out and some won't. So that's not really what they're looking for. They're not looking for perfection. They're looking for managers, professional money managers, okay, who has the ability to dissect the charts and can make some profit over time, but they're not in a rush for you to make it overnight. You are. And this is why you keep blowing these prop firm challenges. So I hope this little technique was helpful. If it was, please leave a comment below. I would love to hear some feedback from you guys. Let me know if this video was helpful. If not, I will see you in class on Wednesday, and I will be providing you guys with an updated video on Sunday for the news that is coming up this coming week. It is going to be a doozy of a week for a little bit on this coming week coming up. I already checked the news events, and we got a couple of big kahunas that's coming. So just make sure you tune in for that. Okay. See you guys in the next video.